Welcome to Seven Bulls. We break down finance so that anyone can understand. Roll the intro. Hello, fellow investors. Welcome to Seven Bulls. Today we're getting into two giants in the North American rail industry, Canadian National and Canadian Pacific Railroad. These companies form freight transportation across Canada and beyond, and we're going to dissect their operations, financial performance, and future prospects to help you determine which one might be the perfect fit for your investment portfolio. Before we move on, if you find value in today's video, make sure to give it a like and share. Also, if you haven't already, make sure to subscribe to the channel. It really helps with the algorithm. Thank you. Now let's get to it. First, let's turn our attention to Canadian National. This company is a true behemoth with an expansive network spanning over 20,000 miles of track, connecting bustling ports, major cities, and vital industrial centers across the continent. But CNI isn't just about size. They're a profit-generating machine, reporting a remarkable net income of $4 billion in 2023. They play an indispensable role in the transportation of essential commodities like coal, grain, and crude oil, the lifeblood of various industries and economies. Furthermore, CNI is actively embracing modernization, with a strong emphasis on intermodal shipping, efficiently moving goods in containers to adapt to the ever evolving demands of a globalized marketplace. Now, let's shift our focus to Canadian Pacific. While not quite as expansive as CNI, CP still commands a formidable network of over 15,000 miles of track, crisscrossing the Canadian landscape. They're also no stranger to profitability, achieving a solid 2.6 billion in net income in 2023. Like CNI, they're heavily involved in the transportation of coal, grain, and crude oil, the cornerstones of many industries. However, they've also been strategically diversifying their business, recognizing the immense growth potential in intermodal transport and actively expanding their reach into new and emerging markets. But to truly grasp the strength of these companies, we need to go beyond just the size of their networks and their profit margins. Let's get into the heart of their financial performance. In 2023, CNI generated a staggering 12.7 billion in revenue, while CP brought in a respectable 10.7 billion. When it comes to the bottom line, CNI's net income was a substantial 4 billion compared to CP's 2.6 billion. These figures are a testament to the scale of their operations and their ability to generate consistent profits in a competitive and dynamic market. CNI and CP are locked in a constant battle for market share in the Canadian railway landscape. In 2023, CNI held a commanding 32% market share, while CP trailed closely behind at 26%. This competition is a driving force for innovation, pushing both companies to constantly seek ways to improve efficiency, enhance customer service, and optimize their operations, ultimately benefiting the entire industry and the broader economy. Looking ahead, both CNI and CP have compelling growth stories to tell. With the Canadian economy projected to expand, the demand for rail transportation is expected to rise in tandem. Both companies are strategically positioned to capitalize on this growth, investing in cutting edge technologies, expanding their networks, and fine tuning their operations. CNI, for instance, has been focusing on precision scheduled railroading, a strategy aimed at improving efficiency and fluidity across its vast network. CP, on the other hand, has been making bold moves with its recent acquisition of Kansas City Southern, creating the first single line railway connecting Canada, the US, and Mexico, opening up exciting new possibilities for trade and economic growth across the continent. So, which of these railway giants should you consider for your investment portfolio? Well, that depends on your individual investment objectives and risk tolerance. CNI, the larger of the two, boasts a greater market share and higher net income, suggesting a more established and potentially stable investment, but CP looks to possibly show potential for a higher growth rate moving forward. Ultimately, the best choice for you will depend on your own due diligence, your assessment of the company's future prospects, and your comfort level with risk. Before you make any investment decisions, you should always do your own research. If you found this video helpful, please give it a thumbs up, subscribe to the channel for more investing insights, and don't forget to ring the notification bell so you don't miss any future uploads. Keep up with your financial education. You're the only one in charge of your future. Be safe.
We grew